What happens when the world's two largest economies go head-to-head in a trade war? And what if you're a small, highly globalized nation stuck in the middle? That's exactly the dilemma Singapore is facing right now. With Trump's latest tariffs on China shaking up global markets, Singapore, a country deeply dependent on international trade, is bracing for the ripple effects. But here's the real question. Will Singapore's economy take a massive hit? Can this tiny nation navigate the storm between two economic superpowers? And what bold moves is Singapore making to secure its future in an era of economic uncertainty? Stick around, because this is more than just a trade dispute. It's a high-stakes economic battle that could reshape Singapore's role in the global economy. By the end of this video, you'll have a clearer picture of whether Singapore can outmaneuver this crisis or if it's heading toward economic turbulence. Let's dive in. Singapore caught between giants, a nation at a crossroads. Singapore has always walked a fine line between two economic titans, the United States and China. As a global financial hub, its prosperity depends on maintaining strong ties with both superpowers. But with Trump's aggressive trade policies, this balancing act is becoming more challenging than ever. On one hand, Singapore is a crucial security and business partner for the U.S., with bilateral trade reaching a staggering $132 billion in 2024. American companies see Singapore as a gateway to Asia, and U.S. investments in the region continue to grow. While China remains Singapore's largest trading partner, with trade volumes exceeding $170 billion last year. From manufacturing to finance, China's economic footprint in Singapore is massive, making any disruption in U.S.-China relations a direct threat to Singapore's stability. For years, Singapore has mastered the art of diplomacy, remaining neutral while reaping the benefits of strong trade relationships with both nations. But now, that neutrality is under pressure like never before. On February 14, 2025, former U.S. President Donald Trump made a game-changing announcement: reciprocal tariffs. This policy aims to impose equal tariffs on countries that charge higher duties on U.S. exports. Trump's justification? He claims the U.S. has been taken advantage of in global trade, and these tariffs are meant to level the playing field. While Singapore isn't directly targeted, its economy thrives on free trade and open markets. If global trade tensions escalate, Singapore's industries, from shipping and logistics to finance and manufacturing, could take a serious hit. The trade war between the U.S. and China isn't just affecting these two superpowers, it's sending shockwaves through the entire global economy. And Singapore, as a key trade hub, is feeling the pressure. So what does this mean for Singapore's future? Can it withstand the economic storm, or will it be forced to pick a side? Let's break it down. The impact on Singapore, an economy under pressure. The U.S.-China trade war isn't just a battle between two giants. It's creating economic ripples across the globe, and Singapore is feeling the aftershocks. From manufacturing to finance, key sectors in Singapore are already seeing warning signs of trouble. 1. Manufacturing and logistics under strain. Singapore's economy relies heavily on global trade, but with China's economic slowdown and U.S. tariffs tightening the noose, industries like manufacturing, shipping, and logistics are taking a hit. One major example, Shein, the fast fashion giant headquartered in Singapore, is now caught in the crossfire. The U.S. recently imposed import restrictions on Chinese-made products, directly impacting Shein's ability to ship goods efficiently. This raises concerns about Singapore's reputation as a trusted logistics hub. Finance and foreign investment. A worrying outlook. Protectionist policies from the U.S. could also make investors more cautious about placing their money in Singapore. If companies anticipate trade disruptions, they may look elsewhere for supply chain stability and market access. Singapore has long been a safe haven for global investors, but uncertainty in the trade landscape could slow down foreign investments. A critical pillar of the country's monetary policy adjustments, softening the blow. In response to the trade shocks and economic uncertainties, the Monetary Authority of Singapore has implemented easier monetary policies. This move is designed to mitigate the effects of slower economic growth and support key industries that might be hit hardest by the global trade tensions. The easing of monetary policy is aimed at ensuring stability in domestic markets, giving local businesses the breathing room they need to adjust, while also reassuring foreign investors that Singapore is still an attractive investment hub. Expanding trade agreements, reducing dependency. Singapore understands that relying too heavily on any single market, especially China and the US, puts it in a vulnerable position. Diversifying trade partnerships is now more critical than ever. To counterbalance the risks posed by the US-China conflict, Singapore is expanding its trade agreements with regional partners. The ASEAN Bloc, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTP, and the Regional Comprehensive Economic Partnership, RCEP, are key focal points in Singapore's strategy. By strengthening ties with these multilateral trade agreements, Singapore can reduce its reliance on any one country and ensure access to a broader, more diverse market. 3. Investing in digital and fintech, building the future of trade. As global trade disruptions impact traditional industries, Singapore is shifting its focus to digital and fintech sectors to minimize exposure to trade disruptions. With the rise of blockchain technology, digital payments, and e-commerce, Singapore is positioning itself as a global leader in the technology-driven economy. By investing heavily in smart cities, fintech innovation, and digital transformation, Singapore can future-proof its economy, ensuring that it remains at the cutting edge of global commerce. Additionally, the government's commitment to creating a thriving digital economy helps mitigate the effects of tariffs and traditional trade barriers, as technology-driven businesses are often less reliant on physical goods and more focused on digital services, stock market, and currency reactions. Markets don't wait for the dust to settle. They react instantly. After Trump's announcement of reciprocal tariffs, Singapore's stock market saw an immediate downturn as investors feared escalating trade tensions. Singapore's stock market takes a hit. Investors pulled money from key industries affected by trade uncertainties. Financial stocks and export-dependent companies saw sharp declines. The Singapore dollar weakens. As uncertainty grows, investors shift towards safer assets like gold and the US dollar. The Singapore dollar lost value, making imports more expensive and adding inflationary pressure. Economic growth expected to slow. Singapore's GDP growth is now projected to fall to 1 to 3% in 2025, a steep decline from 4% in 2024. If tensions continue, Singapore could face long-term economic stagnation as businesses struggle to navigate the shifting trade landscape. So what's Singapore's plan? How is the government preparing to weather this storm and keep the economy resilient? Let's dive into the strategies Singapore is using to turn crisis into opportunity. Singapore has long prided itself on its role as a neutral ground for diplomacy, hosting some of the most pivotal global meetings of the past decade. From the Trump-Kim summit in 2018 to the Shima meeting in 2015, Singapore has earned a reputation as a trusted mediator and a hub for international dialogue. But with the growing tension between the world's two largest economies, Singapore's traditional neutrality is becoming more challenging and riskier. US versus China, a tug of war with Singapore caught in the middle. In the face of rising global tensions, Singapore's delicate position as a neutral player is being tested like never before. With both the US and China vying for influence, the pressure is mounting. The US investigates China's use of Singapore as a backdoor. A recent example highlights the complexities Singapore faces. The US is now investigating whether China's tech company DeepSeek used Singapore as a backdoor to acquire critical NVIDIA chips, a key component for cutting-edge tech. This investigation adds diplomatic strain to Singapore's already precarious balancing act. If it turns out that Singapore inadvertently played a role in facilitating tech transfers that could harm US interests, the country could find itself facing serious repercussions from Washington, potentially jeopardizing its close ties with the US. While Singapore's position as a neutral economic and diplomatic hub has served it well in the past, it's clear that playing both sides in the US-China dispute may no longer be viable. The world's two largest economies are not just competitors, They're in a full-fledged geopolitical struggle. For Singapore, maintaining good relations with both sides is essential, but the stakes are rising, and neutrality is no longer a safe bet. Navigating this tightrope will require a careful diplomatic strategy to avoid becoming a collateral casualty of the escalating trade and tech wars. So how is Singapore adapting its diplomatic strategies in the face of these shifting global dynamics? What role is the government playing to ensure its survival in this tense geopolitical climate? Let's explore what's next. As Singapore faces unprecedented challenges from the escalating US-China tensions, it's clear that standing still isn't an option. The nation is leveraging its agility and innovation to navigate these turbulent waters and ensure long-term prosperity. Here's how Singapore is positioning itself to not only survive, but thrive in monetary policy adjustments, softening the blow. In response to the trade shocks and economic uncertainties, the Monetary Authority of Singapore, MAS, has implemented easier monetary policies. This move is designed to mitigate the effects of slower economic growth and support key industries that might be hit hardest by the global trade tensions. The easing of monetary policy is aimed at ensuring stability in domestic markets, giving local businesses the breathing room they need to adjust, while also reassuring foreign investors that Singapore is still an attractive investment hub. 2. Expanding trade agreements, reducing dependency. Singapore understands that relying too heavily on any single market, especially China and the US, puts it in a vulnerable position. Diversifying trade partnerships is now more critical than ever. To counterbalance the risks posed by the US-China conflict, Singapore is expanding its trade agreements with regional partners. The ASEAN Bloc, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and the Regional Comprehensive Economic Partnership, RCEP, are key focal points in Singapore's strategy. By strengthening ties with these multilateral trade agreements, Singapore can reduce its reliance on any one country and ensure access to a broader, more diverse market. 3. Investing in digital and fintech, building the future of trade. As global trade disruptions impact traditional industries, Singapore is shifting its focus to digital and fintech sectors to minimize exposure to trade disruptions. With the rise of blockchain technology, digital payments, and e-commerce, Singapore is positioning itself as a global leader in the technology-driven economy. By investing heavily in smart cities, fintech innovation, and digital transformation, Singapore can future-proof its economy, ensuring that it remains at the cutting edge of global commerce. Additionally, the government's commitment to creating a thriving digital economy helps mitigate the effects of tariffs and traditional trade barriers, as technology-driven businesses are often less reliant on physical goods and more focused on digital services as a high-value hub, moving beyond low-cost manufacturing. One of the key components of Singapore's strategy is its shift away from being a low-cost manufacturing hub towards becoming a high-value, innovation-driven economy. This means focusing on automation, AI, and advanced manufacturing technologies, which will make Singapore a leader in cutting-edge industries. Advanced manufacturing sectors, such as semiconductors, pharmaceuticals, and biotechnology, will provide significant growth opportunities, ensuring that Singapore remains competitive in high-value sectors, even as low-cost manufacturing moves to other countries. By investing in automation and robotics, Singapore is ensuring that its industries remain efficient and competitive, even when faced with increasing trade barriers and higher operational costs. While the current global trade landscape may seem uncertain, Singapore's ability to adapt, innovate, and diversify puts it in a strong position to weather the storm. By adjusting monetary policies, expanding trade networks, investing in technology, and evolving into a high-value economy, Singapore is proving that resilience is the key to surviving and thriving in today's unpredictable world. As the global landscape shifts under the weight of US-China tensions, Singapore's strategic decisions today will determine its economic success tomorrow. This small nation's ability to balance the interests of global superpowers while also investing in its own future shows how smart diplomacy and innovative thinking can ensure prosperity even in turbulent times. As Singapore navigates through the current turbulence, the looming question remains: Can it outmaneuver the ongoing US-China trade war, especially if tensions escalate further? With Trump potentially securing a second term in the 2024 US elections, there's a real possibility that trade war policies could intensify, which would mean even greater uncertainty for small, trade-dependent nations like Singapore. Can Singapore's strategy still work? The country's diplomatic balancing act between the US and China has been an economic lifeline. However, as the trade war escalates, maintaining neutrality may become increasingly untenable. If the US imposes stricter tariffs or punitive measures, Singapore might face increased economic pressure from its largest trading partners. This could result in disruptions to its logistics and manufacturing sectors, especially as companies look for new routes for global trade. But if China retaliates by imposing more trade barriers, Singapore's highly exposed industries could suffer further. The manufacturing, technology, and finance sectors, which are the backbone of Singapore's economy, would be hit hard by any prolonged trade conflict. The 2025 general election, a pivotal moment. As Singapore approaches its 2025 general election, the question of economic stability has never been more critical. The government's ability to weather the trade storm will play a key role in the political landscape, shaping voter perceptions about its economic management and ability to protect jobs and businesses. A strong economic performance in the face of global uncertainty will likely give the ruling party an advantage in the election. However, failing to manage the fallout from the trade war could undermine public trust and pose a serious threat to the current government's position. Singapore's resilience, staying ahead of the curve. Despite these challenges, Singapore's proven track record of economic resilience gives it a distinct advantage. The country has already shown an ability to adapt to changing geopolitical circumstances, from the financial crises of the late 1990s to the global recession of 2008. By continuing to invest in innovation, expanding its diplomatic relationships beyond the US and China, and securing new trade opportunities with emerging markets, Singapore is positioning itself as a future-proof economy, one that's not overly reliant on any one country or sector. Moreover, Singapore's highly skilled workforce, top-tier infrastructure, and pro-business policies ensure that it will continue to attract foreign investments, even if the global economy faces headwinds. While the path ahead is uncertain, Singapore's ability to adapt, innovate, and diversify will play a pivotal role in determining how well it can outmaneuver the evolving trade war. As global tensions rise, Singapore must remain nimble, anticipating shifts in the global market and continuing to bolster its economic fundamentals. The next few years will undoubtedly test Singapore's resilience, but with its long history of strategic foresight and innovative policymaking, the city-state is poised to navigate the stormy waters ahead, emerging stronger, more agile, and ready for whatever comes next. What do you think? Can Singapore thrive through the storm of the US-China trade war? Let us know in the comments below. Don't forget to hit that subscribe button for more insights into how global politics is shaping the future.